Hi, I'm Greg Corombos, and thank you for joining us for this special podcast series. In this edition, we'll be taking the mystery out of loan forgiveness in the Paycheck Protection Program, commonly known as PPP. There is a lot of information that lenders need to know, so we want to clear up any confusion as quickly as possible. Here to lead today's discussion on the mechanics of loan forgiveness is Wolters Kluwer Banking Segment Leader Samir Agarwal. And he is joined today by Neal Doherty, a senior regulatory consultant for Wolters Kluwer's U.S. Advisory Services, to provide expert insights on preparing borrowers and managing expectations post-forgiveness.
Thanks, Greg. I'm glad to be back, and this time we're going to talk about the Small Business Administration's Paycheck Protection Program loan forgiveness. Many lenders out there are thinking about what to do for loan forgiveness, but their real focus has been on their balance sheets. Companies are coming in asking for forbearance, and that's causing a lot of stress over the balance sheet. Last time we went through the 1502 SBA filing, and now we know that many lenders are starting to get remittance on their fees due to them. So what does it mean to forgive a loan as a lender? They're not really in the business of forgiving loans, usually in the business of making loans. In this case, with the large number of loans out there to be forgiven, we need to change the tactics that a lender uses in order to forgive some of these loans. It's almost like it's a new business for many of these lenders. Today, I invited a colleague of mine, Neal Doherty, a consultant in our advisory services group. He has been helping lenders navigate and deal with the challenges of the PPP forgiveness program. And we're going to talk about that forgiveness process. We know that the SBA notified many of the vendors that do business for banks how they're planning to accept the forgiveness package. So they haven't accepted any to date. We know that there will be a website that's available for folks to use, and we know that there will be also an application programming interface for individuals to use. So whether you're a lender that goes directly to the SBA site to file your paperwork, or you're using a vendor in the middle to aggregate and file the paperwork, there are two avenues to filing the forgiveness applications, and then ultimately get statuses and also upload documents or any supporting material. So Neal, thank you for joining us today. And a little while ago, I had heard a webinar series that you were hosting and talking about the SBA CARES Act program. And I believe there was a question that was centered around our audience on how prepared is your institution to handle PPP loan forgiveness requests. Can you tell me a little bit more about that?
Thanks for inviting me, Samir. I appreciate the opportunity. It's a pleasure to speak with everyone. Yeah, you're right. On June 18th, we hosted a webinar called Keeping a Focus on Compliance in the Face of COVID-19. And we asked our audience the same poll question: how prepared is your institution to handle PPP loan forgiveness? And the results, for the most part, were not that surprising, especially given the seemingly ever-changing nature of the PPP program. We had 234 respondents and had 83% indicate that they were either somewhat prepared or not prepared at all. So those numbers were very much in line with what we had thought when we asked the question. On the flip side, and this was kind of the surprising part, given the uncertainties around the program, we had almost 14% of the respondents answered that they were completely prepared for forgiveness. And again, just given the moving pieces that are still up in the air and the uncertainties, we thought that was very surprising.
So most banks are really not prepared to apply or to process the forgiveness that's associated with the PPP loans. That's right?
That's right.
That makes me kind of pause and think, what do our lenders need to know? They're listening in. And I want to talk quickly about the mechanics that are involved with the workflow that is being prescribed on how to submit for forgiveness. Can you help us to understand, at a high level, what does that look like?
Borrowers need to submit a completed loan forgiveness application to their lenders. In turn, the lenders review the applications. They make a determination about how much of the loan should be forgiven, and loans can be forgiven either entirely or in part. The lender then will inform the borrower of that decision and then submit the application to SBA, who then reviews the application and will either approve, deny, or request additional information. If the loan forgiveness application is approved, SBA will remit the funds to the lender within 90 days. But like I said up front, the process is more complicated than that makes it appear.
Okay, so it's absolutely going to always be through the lender. And that's the most important part is if you're a small business and you're working with a lender and you're going to have your forgiveness application done, it has to be done through a lender. Let's look at the application process. How does one start the process? Is it a small business that has to start it? Can it be their CPA, or is it the lender that starts that process?
The lender can conduct some outreach to the borrower and let the business know that loan forgiveness is out there and that they took out a PPP loan and they may be eligible. But it's the borrowers that initiate, and they do that by submitting a completed loan forgiveness application. And this application is on one of two forms that SBA has published. It's Form 3508, which is the long form, and then 3508 EZ, which is kind of like your 1040 EZ in the tax world. Similar to tax, the 3508 EZ form is limited to certain borrower types, for example, a sole proprietor, and then other borrowers that meet certain criteria, including, for example, not having reduced any employees or made any reductions in payroll greater than 25%.
How complex are these forms? So there's a short and a long, but they must have some of the same elements that are required by the borrower.
3508 and 3508EZ have a calculation form, which basically is the final numbers of forgiveness. So it's the forgiveness amount, it's the inputs that went into determining that amount. And then both have borrower demographic information. Submission of the borrower demographic information right now is optional. And then the 3508 form, the long form, includes other elements. It's a PPP Schedule A Schedule A worksheet, and both those help the borrower to figure out exactly what the forgiveness amount will be. And that's by looking at payroll costs, looking at the number of full-time equivalent employees they had before the pandemic and during what's called the covered period, which is a period of a time in the pandemic. So there's a comparison that's made, and they ultimately get to a number that will be the percentage of loan that is forgiven. It's important to note that both forms have borrower certifications, where the borrower is attesting to the fact that this information is accurate and that they have not, obtained the loan under any fraudulent circumstances.
In your best estimate, how long do you think it takes to fill the application out?
With the EZ form, it should be very straightforward. The other form is going to be very difficult for a lot of borrowers to fill out. This is, again, a very similar situation with the tax analogy. Many borrowers are going to need accountants and lawyers and professionals to help them fill out this 3508 form. So they really need to leverage some sort of solution to make this process easier.
What about the lender side of it? Do they also have to put an application in, or are they kind of screening what's on the borrower's application and submitting on behalf of?
Well, they're screening, but there are certain steps that lenders must take with every application, regardless of whether it's the 3508 or the 3508EZ. For any application, lenders must confirm receipt of the borrower certifications. So again, there's a series of certifications that the borrower must make to indicate that they are essentially not, receiving the loan under fraudulent circumstances. They spent the money for what they said they spent the money for. Their calculations were done in good faith, et cetera. The lenders need to confirm receipt of documentation to support payroll and non-payroll costs. So payroll, a report from a third-party vendor, for example, mortgage or personal property interest statements, utility bills, things like that. The lenders must review the documents that are submitted and confirm the calculations on the loan forgiveness application. And that's really the challenging part, because lenders need to not just do a cursory review of the documentation that's submitted. They actually have to redo the applications and make sure they make sense and are aligned with what the documents reflect that were submitted by the borrower. And then they have to validate that the final forgiveness amount is accurate.
Is there a time limit on when the lenders must engage for a forgiveness application?
There is a time limit. Lenders must, so lenders do their review, and then they both issue a decision to the borrower, which has to be in writing. And then they also submit the application to SBA for review. And that submission to SBA needs to take place not later than 60 days after receipt of a completed loan forgiveness application. So the term completed is not defined in either the the CARES Act or any of the other laws that have been passed or any of the regulations. So that's something lenders need to take into consideration. What constitutes a complete application? And really what we've been guiding lenders to do is consider that when they are ready, when they've gone through all the steps, they've reviewed the input documents, they reviewed the calculations, they feel that they've reached a decision that is accurate, that's when they should deem it a complete application and submit it to SBA.
What do they do if they find an error?
The regulations are clear. The lender needs to work with the borrower to remedy either calculation errors or a lack of documentation. So if a lender finds that the calculation's wrong or they're missing a key piece of information, they have to go back to the borrower and obtain that information and have the borrower redo the calculation.
What does the lender owe the borrower once the application is submitted and the review is complete?
The lender needs to inform the borrower in writing of the decision. The decision can be an approval straight out. Your entire loan has been forgiven, or whatever you thought you were going to get has been forgiven. It could be a different amount of forgiveness. It could be a denial of forgiveness. But both of those scenarios need to be done in writing. And then there's a third scenario, depending on whether SBA wants to do an independent review of the loan file. And in that circumstance, the lender also needs to notify the borrower that they received outreach from SBA indicating that SBA is looking closer at the loan.
Give me the different scenarios under which a lender can deny an application.
The lender can deny an application in part. So if the forgiveness amount that's being requested is less than the borrower thought, or they can deny the application in whole. So the forgiveness, the loan simply will not be forgiven. In either situation, if there's gaps, again, they have to work with the borrower to close those gaps, to fix the errors in any calculations, and to obtain all the required documents. And at that point, the lender will notify the borrower in writing with respect to the decision.
So we've got the application in. Let's talk about the happy path. The lender is also completed its review. Let's say we're set from the lender saying approval, and they're going to submit it to the SBA with the criteria that's undefined, but they're going to submit it to the SBA. What happens then? And is the SBA set up for taking that information in, or how have they disclosed that they'll be processing or looking at forgiveness applications?
Well, there's guidance forthcoming about the actual mechanism for submitting the applications. With respect to the actual review of the applications, SBA has given some guidance in this area. And basically, the guidance is that borrowers can expect that if they had a loan greater than $2 million, SBA is going to conduct a review of it, period. For borrowers that had a loan less than $2 million, we think that it'll be more of a spot check. There'll be some automated calculation that runs where they're going to look at the inputs on the application and the forgiveness amount and make sure that they align. But a full audit, we feel, will be limited to loans that are greater than $2 million. And SBA, basically in their public guidance, has indicated that that's the case, and it's due to the fact that they have resource limitations on what they can audit. They simply cannot look at all the loans that have been made.
So let's say the lender approved it, goes to SBA, SBA denies it upon an audit. What options exist for the borrower and for the lender to reconsider or do another review of the application?
The borrower can appeal SBA's decision, and they'll do that through the lender. The lender, if they receive notice, for example, and this would be before the loan is actually denied, but SBA can reach out to the lender and request documentation with respect to a secondary review. And the lender needs to respond to the SBA by, and it's a tight time frame to respond. It's within 5 business days of receiving any notice. The lender needs to electronically transmit several forms and documents that the borrower provided to the lender in making the determination about forgiveness. So the lender needs to submit those documents to SBA. They need to submit a signed and certified transcript of the account, an executed note. So there's additional documentation hurdles that the lender will have to jump through in working with the SBA to facilitate this secondary loan review.
How does the SBA notify the lender then when they're doing an audit?
They reach out to the lender and they will send the notice directly to the lender that the borrower's loan application is under review. The lender at that point needs to notify the borrower, and that starts the cycle where the lender is submitting this additional information to SBA. The SBA also may reach out directly to the borrower and ask the borrower for additional documentation, which could create a scenario where the lender thinks everything is fine, but the borrower is getting contacted directly to submit additional information.
What happens if the SBA determines that a borrower was not eligible for the loan?
They will reach out to the lender and they'll direct the lender to deny the loan forgiveness application, presumably in whole, but there may be scenarios where partial forgiveness would be granted. But SBA is also going to seek repayment of the outstanding loan balance, and they've indicated that they will quote unquote pursue other available remedies. And that really signals that if there was fraud in the initial application, then there may be a bigger response from SBA than simply repaying the loan.
Let's talk a little bit about remittance. What are the current plans for the SBA remittance here?
After they do their review, SBA will remit the forgiveness proceeds to the lender, plus any accrued interest, not later than 90 days after the lender issues its decision to SBA. So the lender sends in the completed loan application to SBA. 90 days later, SBA needs to remit the funds to the lender. The loan will go off the lender's books, although we're not exactly sure how this process will work, and we're waiting for further guidance here.
If today is July 2020, and the first time we would really see lenders receiving SBA remittance, we're talking Q4.
Yeah, end of September, early October. That's right. I mean, it could happen faster than that. Certainly, especially if there's easy cases with maybe a Form EZ and a small business that has clearly has a loan that should be forgiven, but it could be delayed until that time.
So how long does the review period take place? I'm assuming most banks are going to want to get done as fast as possible. Do we know how the SBA is going to handle it? Is it the same thing, first in, first out, or have they published any other guidance on how long the review period could take?
They have published guidance, and they've indicated that they're going to take advantage of this 90-day window. And the guidance they've published indicates that they're going to look at compliance obligations by borrowers and lenders during this 90-day review period. SBA is concerned that due to the speed in which the program was launched, the fact that a lot of lenders that had very little SBA lending experience are involved, they want to make sure that the loans that were originated properly, and they were required due to the impact of the pandemic, and that all the compliance obligations from both the borrowers and the lenders have been met.
Are there any risks of fee clawback for lenders if a negative outcome was found from a review?
There are. SBA in their one of their interim final rules, was originally published on May 22nd, indicated that lenders are at risk of clawback of lender fees, and actually even the potential loss of the loan guarantee. Currently, those cases are limited to where the borrower was not eligible for the loan in the first place, or where the lender failed to comply with origination or record-keeping requirements.
It sounds like there's a lot of diligence required, both from borrower and lender, to ensure that a forgiveness for a loan is successful. And what I want to understand better is, aside from just the forms and applications that we have to provide, what documents might be good pieces of substantiation for why the loan should be forgiven?
Apart from the applications, there are a number of other key documents that the borrower needs to submit to the lender so the lender can review the application and determine the forgiveness amount. So the key documents are the eligible payroll expenses, so documents showing the compensation paid to employees. And again, if you're providing payroll data from a recognized third-party provider, that can be relied on by the lender more than if you're doing back-of-the-envelope calculations. Eligible mortgage interest and rent and lease payments, so proof of payment of mortgage interest, and it can be interest on personal property as well. So, for example, if you lease an automobile for your work, you can claim the interest as part of the forgiveness amount, not the principal, just just the interest. Specified utility payments that were in place before February 15th, 2020, and then information about full-time employees. So if you had an employee that was let go and you tried to rehire that employee, but the employee didn't want to come back to work due to the pandemic, you need to keep records of that type of information to show that you made a good faith effort to try to get the employee back, but that employee did not want to come back to work because of the pandemic. And so if you can show that, you're not going to be penalized for having a reduction in employees.
If we go through all of that, we still get success or we get asked for more information. It's really just a letter back that we are getting from our lender if we are a small business. And for the lender, it's really status or notice from the SBA on the disposition of the application. Is that right?
Yeah, that's right.
Okay, and then 90 days later, we would expect remittance to come flowing through. Do you think some lenders will remit to the end borrowers before receiving the SBA approval and remittance?
I don't think that is prudent. This is a very new process, and we don't fully know what SBA is going to do. I mean, certainly for lower amounts, there's less risk. If it's above $2 million, those loans will be audited, so you certainly wouldn't want to do that. But I think a best practice would be wait until you see from the SBA that your file has been approved and you are going to receive the money that you think you're going to receive before you pass on that information to the borrower.
Neal, let's talk about the actual operation in a bank, because the mindset of our individuals has always been, to make loans. And now we're going to be in a business of how to forgive loans. I think that affects the psyche of a loan officer or processor, including, upwards of the management at an institution. And it could dynamically change the way that we think about how we treat our customers. So are there any guidances or feedback that you can tell us around what do we have to do to make sure our employees are prepared also for the forgiveness applications or requests?
That's a great point, Samir. It is a very different mindset that lenders are undergoing here. First and foremost, they should be looking at employee training. So lenders need to develop end-to-end training plans to assist employees in tackling this forgiveness challenge. First off, the process by which applications will be received and intaked and tracked to make sure that there's no gaps there. In the background, the 60-day clock is running, so you need to be cognizant of that, and your employees have to understand that there is a time limitation on processing these applications. Employees need to understand what the lender review process entails and the timeline and how to finalize the forgiveness decision. Lenders should train their employees on borrower communications regarding incomplete applications and the ability to follow up with borrowers to obtain additional documentations or to discuss errors in calculations like we talked about earlier. Very, very important is going to be borrower training employees around how to communicate denied applications, because a lot of borrowers went into this program thinking that all the loans would be forgiven and they were not really going to have to do much to get forgiven. And so this will come to a shock to many borrowers when they have outstanding balances.
It's supposed to be very easy, right? Take advantage of a government program to help us survive during shallow times. So it's very tough in my mind, of having been a banker, how we approach our customers and what does that mean to our org. So while we're still talking about the lenders organization, do you think that it'll be easy or hard for loan origination teams to become loan forgiveness teams? Could the same person do that job?
Many lenders are not going to be able to staff up with additional employees to take on this challenge. So the key to having your existing employees who are transitioning from originating loans to forgiving loans is training, understanding the program, and then also understanding like you said, what the borrowers are going through, what the expectations were, how the forgiveness program was communicated, and the whole PPP program. And that goes to training and communication and making sure that everyone is aligned and consistent.
When is the first time that somebody can actually apply and submit the forgiveness application?
Well, they can technically apply and submit right now. That would be on a paper form, which they can do. They can go to their lender and they can submit it and sit down with their banker. And obviously, that would be in a lender that's has probably low volume, but they could submit it right now and send it to the SBA for forgiveness. We don't, however, expect that the real volume will happen until obviously SBA releases additional guidance on the mechanics of the loan forgiveness submission process. And then also, I think a lot of borrowers will wait to see what happens. There's rumors of additional legislation out there in terms of automatic forgiveness, for loans lower than a certain threshold. And then also the SBA extended the covered period, so the time in which that borrowers had to spend the money from 8 weeks to 24 weeks. And so that'll have the effect of lengthening the time in which these applications are going to be submitted, which will be a good thing because it'll take some of the pressure off the lenders and will kind of reduce the height of the wave as it's coming in.
So then, if I'm thinking with my business strategy hat on, both from a lender and from a borrower, I should be also thinking about when to ask for forgiveness. And just by 24 weeks to spend the money, do you feel that really the forgiveness applications will be submitted in 2021 as opposed to 2020?
Well, that's a good question. And, there's what happened recently in Congress, and the president is expected to sign it. The window for accepting loans was put out to early August. And there's talk of a fourth round of stimulus. So I think there's definitely a potential where forgiveness stretches into 2021, even without further congressional action. One additional bill that Congress passed and the president signed extended the time in which forgiveness could be applied for to the end of the year. So we will certainly see some applications lingering into 2021. But, the pandemic shows no sign of going away, unfortunately. And so with talk of a fourth round of stimulus, I think the program is here to stay in some shape or form. There will be refinements around the margins, and there's always talk of, like I said before, automatic forgiveness for loans below a certain threshold. But that's up in the air right now.
Let's flip over to customers. What's the right way or the best way to inform customers on timelines and what to expect?
Yeah, this is very important. Lenders should be getting out in front of this and working with their customers in terms of describing what the forgiveness process looks like, what the required documents are, what the application process is, and really teeing those borrowers up for success, especially because lenders, as they do their review of the loan forgiveness application, they need to work with the borrowers to make sure that the application doesn't contain any calculation errors or is missing documents. So to the extent that they can have a process up front that educates borrowers on what the requirements are, they will be better served when the application is actually submitted and they start their review process, because it will extend the timeline for review if the lenders have to go back multiple times to the borrowers to collect additional documentation. So the communication strategy should start as soon as possible and really start prepping borrowers so they're successful in their forgiveness application.
What about complaints or disappointments when the applications are not fulfilled? What's your guidance on customer communication in those scenarios?
Yeah, there will be many complaints. We know that. That's just the nature of the program. Like we talked about earlier, this was sold as basically a risk-free loan, and then kind of the goalposts move, and now it's many borrowers are not going to get the level of forgiveness they thought they were going to get. So they're going to complain. They're not going to complain to SBA. They're going to complain to their lenders. And lenders need to ramp up complaint training and understand how to intake complaints and do trending and analysis to make sure that they're tracking the complaints. A couple things to keep in mind there. If there's any fair lending allegations, they want to be super cognizant of those and give those heightened scrutiny and heightened response. They also want to do, again, trend analysis and they want to be mindful of any threats of litigation and also any potential damage to reputation. Because one of the problems going into the program was the delays in funding the actual loans, and that some parties, some businesses were shut out. And that's going to be hopefully not true, but that is a risk in terms of borrowers not getting what they wanted and having reputational issues for the bank.
So that also plays into potential fraud or any fraud flag that may come up during a review, or even any compliance questions that may come up. How does a borrower and lender protect themselves from the risk of fraud or the risk of non-compliance?
Yeah, that's a big question. And I think one of the scenarios where lenders need to be very mindful of is where a borrower has submitted an application and is not satisfied with the forgiveness amount. And then they, after working with the lender to provide additional documentation or fix calculation errors, suddenly there's new documents there that prove up the new amount or the original amount for which forgiveness was sought. And if there's inconsistencies in the documentation, that could be a real red flag. And lenders need to watch out for that because, in the future, these files will probably be looked at again. And so you want to make sure that you flag those situations, and in cases where there's obvious fraud, that you're not facilitating forgiveness that the borrower is not entitled to.
So let's say everything works along the happy path, or even any bumps in the road are resolved appropriately, and our loan is still on the books at the lender once we're forgiven. How long does it stay on the books from a servicing perspective? And are there any obligations or things that we need to be aware of? Or if our loan is 100% forgiven, or is that the end of the transaction?
If the loan is 100% forgiven, that'll be the end of the transaction. There'll be some record keeping and back office things that SBA does to close the books on it. The PPP loan repayment period is 2 years unless the loan was originated after June 5th, 2020. And June 5th was the effective date of the Paycheck Program Protection Program Flexibility Act of 2020. It was a law that amended the original CARES Act. So for loans that originated before June 5th, the term again is 2 years. For loans that originated after June 5th, those loans have a 5-year term. Now, lenders and borrowers can work together on loans that have the 2-year term and agree to extend that term to 5 years. But there must be a mutual agreement to that fact. So loans before June 5th, automatically 2 years unless you get an extension with your lender. Loans after June 5th, automatically 5 years. The interest rate on the loan is 1%. The deferment period for making payments and the deferment of interest was extended from 6 months to the date that SBA remits loan forgiveness amount on the loan. But if forgiveness has not happened within 10 months after the covered period ends, payments of principal and interest will begin on that date.
It really is helpful when there's no loan payment ultimately for a very long period of time, and it balances on the books for the bank until there's another action on it past 10 months.
That's right.
Are there any other risks that are involved with servicing? I mean, how does default work on a PPP loan after 10 months?
Yes, lenders are going to have to be aware of their responsibilities in terms of servicing the loans. Again, a lot of the loans were entered into with the understanding that they would be forgiven. And so any balance on the books from the borrower's perspective may come as somewhat of a surprise. Another factor that plays in here is probably the most obvious one is borrowers are struggling, and a lot of these businesses are not going to survive. So there's going to be a high potential for default from borrowers, not only because they thought the loan would be forgiven, but also because the business simply can't repay the loan.
How long do banks need to hold on to the documents for these loans?
Banks are under the requirement to hold on to the documents according to their normal record retention schedules. So that just depends on whoever their regulator is. SBA has produced guidance, has published guidance that borrowers have to retain documentation for 6 years after the date the loan is forgiven or repaid in full.
Well, you've definitely given us a lot to think about, Neal, and it's been quite informative. I'm curious, what do we leave out, or what else are you thinking about that our clients would need to know?
Well, I think the biggest thing is the uncertainty. There's changes, and as you know, Samir, there are changes literally every day to this program. There's guidance that comes out from SBA. Congress is getting increasingly active in terms of refining the program. And one of the core things that is currently on Congress's plate is the potential for automatic forgiveness for loans below a certain threshold. So anytime there's uncertainty, there's the need for expert advice. And here at Wolters, we have a team of experts that can help clients navigate these waters and to understand the nuts and bolts around the forgiveness process.
I truly appreciate you joining us today, and thank you. And I know our listeners have probably found our conversation very informative, and it helps them navigate and prepare for loan forgiveness requests. So thanks again, Neal. Thanks for joining us today.
That's Wolters Kluwer Banking Segment Leader Samir Agarwal, joined by Neal Doherty, a Senior Regulatory Consultant for Wolters Kluwer's U.S. Advisory Services Group. Wolters Kluwer is the host of this podcast. Wolters Kluwer is a market leader in SBA lending technology with the TSoft Plus software solution. They recently launched the TSoft Plus PPP forgiveness module to help local lenders and their small business client recipients of PPP funding facilitate loan forgiveness applications. Additionally, they offer advisory services to assist clients with evaluating PPP loans for compliance and navigating the forgiveness process. For more information and additional guidance, visit wolterskluwer.com or call 800-397-2341 and press the number 1. For more information on the Paycheck Protection Program, please visit the Small Business Administration online at sba.gov. I'm Greg Columbus. Please join us next time as we expand this series into additional areas of regulatory compliance.